Hi everyone, my name's Darryl Panes, CEO at As Good as Gold Australia, and today I'm joined by my brother Brian and partner at As Good as Gold. And I've got to say, Brian, I've been looking forward to this interview for a long time.
Absolutely.
So today we are joined by none other than the founder, president and CEO of First Majestic Silver Corp, Mr. Keith Neumeyer. Keith, firstly, welcome and thank you for your time today.
Oh, thanks, Darryl and Brian, and nice meeting both of you.
Look, Keith, one would suggest that it's a pretty crazy world out there at the moment, full of uncertainty. Stock market in disarray, property markets in massive bubble territory, interest rates at all-time record lows, household debt soaring to new all-time highs. And historically, this would be, you'd say, the perfect recipe for major upswings in the precious metal space, which hasn't happened as yet. So we've got a bit to talk about. But first, Keith, what I would like to do is ask you if you could just share with our viewers, because I think they're going to be very interested in this, to know what it was that led you to develop such a keen interest in the precious metals industry to start with, and then how that progressed to you now heading up some of the biggest mining operations in the world. Would you share your journey with us?
Well, I think I was attracted to silver and gold, later in my career. But I was in the financial markets in the '80s, and I worked with three of the largest Canadian national banks up until late '80s. I was on the floor of the crash. I traded equities for three of the big banks here and in Vancouver, and where I'm located. That was a pretty interesting time. And then, due to the crash, the Canadian banking system was very much in disarray. And, here in Canada, the banks were not allowed to own brokerage firms back then. But due to the financial distress that was in the financial industry at that point, the government changed the laws in Canada in 1989 to allow the banks to buy other brokerage firms. So hundreds of people across Canada lost their jobs in 1989 and 1990, including myself. And I found myself, out there wondering what the heck to do. And I've been trading all these mining stocks for the last 6 years, and I like rocks as a kid. So it kind of makes sense to go learn about mining. And so I started working for a couple of mining companies, very small junior companies, and learned a lot of the bad things and learned a few good things. And then I put together First Quantum Minerals in 1992, put together the early management team in 94, 95, and a couple of Australians joined me in 95 as well. And the group of us vended in some assets in 95, 96 and broke ground on the bottom of Cuba in Ndola, Africa in 97. It was up in production in 98, and I left the company in 2000. And First Quantum is one of the very, very top copper companies in the world today. And in 2002, I wanted to get back into the business. So from 98 to 2002 was a very difficult time for the mining sector. To the last 5 years, quite honestly.
Yeah.
But when I saw that gold and silver bottomed out, coming from a copper company, I was a very supply-demand, fundamental kind of guy, and I like gold, but there's lots of gold around, lots of gold companies around, and I didn't really want to get caught in just being another gold company. And I started looking at other metals. I thought about copper, of course, but silver kind of stood out to me as being quite a unique metal, and the supply-demand fundamentals and all the changes that were happening, or what I predicted over the next 20, 30 years, were going to, in my view, change the view of silver and, of course, the price of silver. And there being very few silver companies in the world, I thought it would be kind of a unique niche kind of market. And I decided to put First Majestic Silver together. And with my reputation and so on, I was able to raise the initial seed capital. I did very similar things. I put together the management team in 02, 03, and started acquiring assets in 04. And by 2010, we had 4 producing mines and And then, by, a few years later, we broke through 10 million ounces production. And now today we're the second largest silver producer in Mexico.
Tell me, Keith, did you visualize when you started your commitment in this industry, did you foresee at that point of time that it was going to lead to anything like what it has today? I mean, it's a huge operation.
Well, look, I'm a big thinker, so it's not big doesn't scare me. Big is good, and raising capital is something I'm relatively good at, and something I've been able to marry investors with projects. I've done that well over the last 35 years, and a lot of people have made a lot of money, following some of my ideas. And the tough thing is just the time. It takes a lot of time. You don't build a $1 billion company overnight. These companies go through gyrations, and there's years that are grueling and take a lot of effort, and sometimes it's not as easy to come to work as other days, but you gotta just stick through it and stick and stay stubborn and convicted in your ideas, and you also have to have very good people around you that believe in your ideas and trust your ideas and are willing to work with you and work as a team together to build on these ideas and create the wealth that I've been able to create over my career.
Yeah, like Brian and I have got a background in manufacturing. We over a 30-year period. So we started with, it was a very small company. We had 4 or 5 employees, and developed that to around 60 as a manufacturer, and we're exporting to 17 countries around the world. But I look at the size of your operation, and that's just another big step. So congratulations, a huge result, and I'm sure our viewers have got generate some real value out of that. Brian.
Yes, good afternoon, Keith. I have about 6 questions, and Darryl has about 3 or 4. I'd love to be able to ask you 100 questions, but we obviously don't have the time. But anyway, the first 2 are going to lead on from one or the other. There are a number of newsletter writers that have varying beliefs of the quantity of silver ounces that JPMorgan have bought since the financial crisis of 2007-2008. What is your opinion on the subject, and do the banks have control over the price?
Well, it's 2 separate questions. Being coming from the banking sector, I know banks are risk adverse generally. Banks usually, at least in my experience, and I'm Canadian, so maybe U.S. banks have a different risk profile than a Canadian bank, but I don't think they've got that much risk difference personally. That's my view. So, for a bank to take on a large principal position in anything, I think is not something they're designed to do. They clip margins off of money in financial instruments, and that's their business. So if in fact those letter writers you're referring to, are right that a bank like JPMorgan has been accumulating a large silver position, the question I would ask is who's it for, right? Because it's unlikely it's the bank itself. I don't have the information. I read the same things you read, but I don't have the information to confirm whether that's happening or not. So assuming the information is accurate that JPMorgan has accumulated these ounces, I would highly doubt whether it's for their own account.
Yeah, interesting, and I tend to agree with you on that one. Look, the next question really is a follow-up question to that.
I could answer your second question because you had 2.
Sorry. Go ahead.
So the answer: do the banks control the markets? Well, I think it's been probably about 30 years since maybe since the crash of '87 that we have not had some kind of control, right? And the governments, the banks, they don't want to see that kind of market disruption ever happen again.
No,
it's in their best interest to prevent that from happening.
Yep.
So I think there is some collective behavior that they work together to try to create normality and stability in the marketplaces, all markets. I don't care which market you're referring to, whether that's manipulation or not. I wouldn't call it manipulation myself. It could be managing your book, right? And I think that would be more accurate. So if you're, for example, let's talk about silver, and I'll just use this as an example. If you're Toyota and you need 50 million ounces of silver delivered to a variety of ports around the world in 2019 for the manufacturing of your automobiles, you're going to call up the banks. It doesn't matter who, any bank, I don't care who it is. And you're going to say, please deliver X amount of silver on a monthly basis to these locations. And the bank will happily say yes and write a contract. And you've now guaranteed the supply of that metal. It could be copper, it could be lead, it could be zinc, it doesn't matter. Yep. So Toyota's happy. They know that they're getting their 50 million ounces. They know the price. The bank is happy. They know they've got a margin there. They've built it in. They're happy. They know all their costs. Both sides are happy. All of a sudden, you get gyrations in the marketplace, and they start getting offside in their positions because all of a sudden, now they're short in the COMEX, the paper markets, but they're still obligated to deliver those ounces. So the cost of that short goes up over time as the price climbs.
Yeah.
So will they try to hold the market within a range so that they don't have financial difficulties? Well, they probably do. But the extent of it, look, I don't work for the banks anymore, but I have worked for them. I would suggest that they probably try to manage their book.
Well, I have heard the word managed many times before, so I have to tend to agree with you. The second part, or another question, but related to the first one. Ted Butler, I'm sure you've heard of him. Ted Butler has recently stated that JPMorgan has gone long on the COT report after being short for many years. I know this has been changing in the last month, but is this something that you follow, or do you believe that our financial institutions have too much say on the price of precious metals?
The COT report is followed by a lot of people, and not just the COT report for silver, but the COT report for the S&P. The COT report for the Russell. There's hedge funds out there that follow these COT reports to the T, and
that's right.
The general view is that hedge funds are generally wrong, and the commercials are generally right. So when they see an anomaly show up in these COT reports, and whether it's there's the standard deviation ranges on these instruments. If it goes over 2 minus or 2 plus, these hedge funds will start to take positions based on the standard deviations on their calculate or on their analysis of these COT reports. And there's a whole industry of hedge funds out there that just trade all this stuff out there based on these COT reports. I don't pay a huge amount of attention to them. I read all this stuff, but I don't trade off them in any way.
Right. You don't make financial decisions based on COT reports.
No, I don't.
No.
Okay. Keith, historically, gold has been a barometer of the economy. Gold down, economy up, gold up, economy in decline. Historically, governments have manipulated the precious metals market. I think, and I really want your opinion on this, I think manipulation works until it doesn't. Are we entering, in your opinion, the doesn't stage?
It doesn't work because of sentiment. That's it. The market's sentiment driven. Okay, so all the algos on the planet, and about 80 to 85% of everything that trades in the world is done by algorithms.
Yeah.
Humans don't trade virtually anything anymore. So there's a view in the world that is a view, and that view changes. All these smart 30-year-old guys out of MIT write all these fantastic algorithms, and they create a hedge fund, and they raise a bunch of money, and that works for a cycle, and that cycle can last 5 to 10 years, and then it doesn't work anymore, and those hedge funds blow up and go away. And then a new group of hedge funds shows up, they write a different algo, and they take another trade. So, that's the world we live in. Currently the trade is buy US, buy the US dollar, buy the dips. CNBC the other day says, okay, the dip is over, the rally started again, all going to new highs. Whether they're right or wrong, who knows? I don't have a crystal ball, but the world, the hedge fund world, is programmed to go long U.S. currencies or U.S. securities, go long the U.S. dollar, and short emerging markets, short precious metals. And that trade has worked extremely well for them for the last 5 or 6 years. And people have made a ton of money on that trade. But that, go back to 2000, 1999, 2000, 2001, where all of a sudden things started to crack, right? There was and then they woke up, Y2K didn't happen, and fuel cells weren't as good as we thought they were. Back then, it was not marijuana, it was fuel cells. It wasn't. It wasn't. The particular Nasdaq the bubble that we're having now was internet bubble. So it's kind of related, but not quite. So we're kind of, in my view, back into almost like a very much look-alike market from 1999 to 2002. But time will tell. We don't know if in fact that is occurring, but I think it is. I think we're in the beginning of the next major bull market in resource stocks, but only time will tell, of course.
I think, Keith, is a little, I very often suggest it's a little bit like a juggler. You've given the juggler he's pretty capable, or she is pretty capable, juggling 7 balls. You throw another one at them from the side, and they find it more difficult with 8. You get to 9, and you're struggling to keep them all up in the air. You get to 10, and you drop one, and then they all come tumbling down. And I see this the economy very similar to that you're jacking up the stock market 1 minute, and then you're jacking up the economy of another country, and then you're influencing another market. It might be the precious metals market, and you've got all these balls up in the air, but only one has got to let go, and they all come crashing down. It's a little bit like Jim Rickards, I think, when he makes reference to the fact that that's that last snowflake. And then the whole side of the cliff just collapses, and you've just got this snow freefall. So it's, as you say, it's just a matter of time. And I don't think we're too far away. Brian?
Yeah, well, the powers to be, all the banks and all the big money around the world are building all the support systems in place to, there's mini avalanches occurring.
Yes.
But they keep catching them, and we'll see how long that lasts. Yeah,
Keith, you heard from Darryl that we came from an engineering manufacturing business, and we did a lot of work in Europe and in England. And I always thought that prices were developed from supply and demand. It doesn't seem to be that way when it comes to silver and gold. This next question is similar, but if you could cover it. In discovering the price of gold and silver today, the world uses the COMEX and a few other exchanges. It amazes me that in less than 2 days on the COMEX, in the annual supply of silver can change hands or be traded. What stops the mining companies from writing their own contracts based on supply-demand fundamentals?
Well, the problem is, that's the system, right? And you're going to take it's going to take a lot of very big players, much bigger than us, to change that system. We're not big enough to change the system.
Okay.
I could yell and scream at the top of my lungs.
I do that every time.
Well, I've had a lot of CEOs around me, and I sometimes get called a bit of a quack because I am so outspoken. But I come from a different background, as most CEOs that run the mining companies. Most of them run by geos and engineers, and they're very good at what they do. But they don't come from a financial market as I do. So I just look at things, I think, a little bit differently than most, and I find it very frustrating. But we get contacted by the end user and on a regular basis, and the end user, let's use Toyota as an example, as I used them before. Toyota phones us up and says, look, we'd like 10 million ounces of silver from you delivered over the next 12 months, but we want to fix your price at today's market price. We would tell them to go fly a kite. Like, why would we ever do that? I want the exposure to the silver. My shareholders want the exposure to the silver, or they wouldn't buy the company's shares. Why would they own First Majestic if they didn't have the upside of the silver price? So why would I give that away to an end consumer? Likewise goes, if we got called by somebody outside the banking system in Europe, let's say, or in Asia, or Korea, or you name the country, and we don't know who they are, and it could be a very legitimate business. They could have plenty of capital, no risk at all, but yet we get a letter from them or an email from them or a phone call from them saying, hey, look, we'd like to buy 1 million ounces of silver from you. Can you ship it to ABC Port COD? And we're going to say, why would we do that? Why would I give you 1 million ounces of silver and wait for payment? So we can't take the risk as a business to deal with groups that we don't know who they are. So the banks supply a very critical component to what we do in delivering and metal, and then supplying metal to industry. They've got the entire system set up to do that. They do it all the time. They ship silver, gold all over the world. They've got all the systems in place. For us to try to do that and set all that up ourselves, it just simply wouldn't make any sense. So we sell our metal to the banks, and it just works.
Yep. Okay.
The biggest issue is the leverage on the COMEX. This is where we need government's help. We need the regulators' help, because the banks are just doing what the banks do, right? And you can't blame them for trying to make money. But it's the COMEX, it's the regulators, and if as long as you're only allowed to buy 1,000 contracts in silver long, that's the longest you can be as an individual or corporation, 1,000 contracts, which I think is 7.5 million ounces if I've got the math correct. But there's no limit on short positions. So you, as an individual or hedge fund, you can sell 100 million ounces of silver short if you wanted tomorrow, right? And there's no limit. So as long as you don't have any position limits on the short side, and you've got position limits on the long side, the system is designed for the banks, and that to make money, and that's really the unfortunate part of the entire COMEX setup.
Yeah.
Okay, that makes a little bit more sense. I mean, Darryl and I do come from manufacturing. We haven't been in finance. We learn pretty well being involved in the bullion business. We learn things every day. So that's a great answer. Thank you very much. I have another short question. What part does the price of energy have on the price of mining silver? And seeing that the price of oil is rising, how much longer than can the price of silver stay at $14.50 per ounce?
I think ultimately, oil is the granddaddy of commodities, and at least it is until we get off oil through the use of solar panels. And that'll be what really, I think, breaks the back of the silver short sellers. But nevertheless, that's a different topic. But commodities tend to move together. but the correlation is not always equal daily. You know, some days it just doesn't work. Like, look at silver and gold, for example. You know, one day we just saw a couple of days ago, silver was up and gold was down, you know, which is an unusual thing. You don't see that very often. You know, sometimes silver and gold are up equally. Sometimes silver outperforms gold. You know, copper. You know, all these different metals. You know, there is a general long-term correlation between all of them. You know, if silver, you know, goes to triple digits, as I expect it will over the next 3 to 5 years, that's also that means oil's got to go up. That means gold's got to go up. Copper's going to go up. That means everything's going to go up.
Yeah. Okay. All right. Makes a lot of sense. The next question I'm going to put to you, I go back to 1980 here in Australia, and I'll present the question as easily as I can. But in 1980, you could buy a 3-bedroom house in Adelaide, where we live in South Australia, for $36,000. That's a fair bit cheaper than what it is today, $36,000. But in equivalent ounces of silver, if you had 800 to 900 ounces of silver, that would be your $36,000. Today, we have our homes are costing us $400,000. I've read a lot of Jim Rickard's books, in fact, all of them. Out of the Death of Money as a reference, in a realization of a reset, gold would come to. He thinks gold will be revalued somewhere between 7,000, 10,000 US per ounce, and using a gold-silver ratio of 25 to 1, which is fairly conservative, that would put silver at $400 Australian or $280 US dollars. Looking back in history of the 1980s, do you see the possibility of a home being purchased for 1,000 ounces of silver, which at $400 an ounce would be a $400,000 property? So would you believe that if somebody owned 1,000 ounces of silver, and in Australia that would only cost $25,000, would you believe 1,000 ounces would still buy a 3-bedroom home, average home, in any country, America, Australia, or whatever?
Well, I never thought of it like that. You hear the 1 ounce of gold has bought a man's suit for the last, since whatever last.
Absolutely, yeah, dark ages.
Yeah, since hundreds of years. So, and that seems to have held up fairly well. I haven't thought about it on the silver side of things, but look, we're mining 9 to 1 right now. We're for every 1 ounce of gold globally, we're only mining 9 ounces of silver, and we're trading at 85 to 1. So that in itself is pretty unusual.
It's ridiculous. Yeah.
It's there because that's just the trade. People in Wall Street, Bay Street, people in Sydney. I go through. I was in Sydney about 6 or 8 months ago, and an institution. I asked him. I says, do you own any silver? And he says, no, I just own gold. I says, well, why? And he said, why do I need silver when I've already got gold? And I said, well, gold and silver are completely different animals. Gold is a currency, and it's something that you should have in your portfolio. Everyone should have it. But silver is a very strategic metal, and it's being consumed at an alarming rate at increasing rates every year, and production is dropping. And there's no other metal like it that shows the supply-demand fundamentals of silver. And here I am educating this young guy. He's managing $60 billion, and I have to educate him on the supply-demand fundamentals of silver.
It doesn't make a lot of sense.
It doesn't. It really doesn't.
Just a quick one here. You mentioned 9 to 1 ratios being mined at the moment. How many years back have we been mining it, or have you been mining 9 to 1 ratio?
It's been dropping. We looked at it about 10 years ago, and it was around 11 to 1. So
okay.
It's not dropped a lot, but still 11 to 1. It's still we hit 31 to 1 in April 2011 when silver hit $50. So I would of course never predicted silver going from that 50 to current prices, but nevertheless when it did go from 90 to 31 back up to current levels at 85.
Yeah.
and we're in a deficit still, and the deficit just continues.
Okay.
I have another law of supply demand question.
Mm-hmm.
And interesting, you've quoted a couple of ratios, like the 9-to-1 ratio that silver's been dug out of the ground at the moment, and yet we've got a ratio at 80-to-1. All crazy, I understand that. Demand for silver, physical silver, for batteries for electric cars, photovoltaic cells, we've mentioned that, all electronic devices, no doubt demand for silver is accelerating all of the time. It's massive industrially. Now, I look at our situation just recently, and I've spoken with a number of mints, Keith, and I've asked them the same question because a lot of them are really struggling as we speak to supply us with silver, whether that be in bars or coins. We have problems everywhere. So typically, the Perth Mint cannot supply and will not take an order right now on 10-ounce or 1 kilo bars. Sunshine Mint will not take an order, and they're a major supplier to us, cannot take an order on coins and bars at the moment as we speak, and haven't been able to for a month, and are indicating to me it's at least another month before we can see something positive there. So I asked the reasons as to why this is the case. Their answer is, up until a couple of months ago, demand for silver, investment silver, down. Okay. Now, in the last couple of months, it's accelerated, and there's a level of interest now that they weren't experiencing before. When it was down, when the demand was down, they laid off a number of people. And now they just don't have the production facility to be able to cope with a relatively small increase in demand. My point is this: it seems to me to be a very, very fragile market. And if the demand for in industry continue to accelerate, and if we just got another minor, interest in precious metals for investment purposes, I don't think we'd be able to get it. I mean, we are currently, with many suppliers, waiting a month for delivery. And as I said, in some cases, they can't even accept an order. So it wouldn't need a lot more to make it almost impossible to buy precious metals for investment. What's your take on that?
Well, that's the inelastic. That's what creates the volatility in the market. Sorry.
Yeah.
Is because the commercial guy, the story I gave you regarding Toyota, the bank has plenty of warning. So
Yep.
they can deliver into industry in a fairly consistent and normal basis because they've got pre-warning. They know where all the supply is coming from. They know where all the demand is coming from. And if they can't match the supply demand, they can use their own hoards. They can go to governments that they know have hoards, or they can go wherever they go to get it. I'm not inside the banking system to really answer that quick question, but for whatever reason, they're able to find the metal to supply industry. But it's that investor demand that we saw back in 2011 that really spiked the market, because that's what's not expected. That's what's not intended, because the system's not set up for that, because it is a tight market. And if you look at it, like the miners produced, in 2017, 800 million ounces of silver. So at $15 an ounce, that's less, $14 billion market approximately. So a $14 billion market in one of the most important metals there is on the planet. Without silver, we couldn't do what we do every day as a human race.
Right.
All our nice little gadgets, all the things that we take for granted, just simply wouldn't work. And no one even thinks about it. We just consume all these nice little fun things without even thinking about what
Yes.
And the second there's any demand further than what the banks anticipate is going to occur, that's when the system actually starts to break. And we saw it in 2011, 2010. That whole move from end of 2010 to early 2011, that was an amazing move. and that was just retail demand just coming into the market. Everyone wanted to own silver. We sell silver off our website, and we're just a small little silver seller. It's not even really part of our core business, of course. We just do it as a benefit to our shareholders primarily. And we were selling 100,000 ounces a month, and we had to bring in part-time people just to box up this silver and ship it out. Today, our sales are down to 3,500 ounces a month.
Right. Okay. It's massive, isn't it? Yeah.
Okay.
It's a huge difference. And if that's happening to us, then how's that affecting everyone else? Right.
Yeah. So it's a very fine line, isn't it? I mean, you've just confirmed that. Yeah. So, it wouldn't take a major adjustment. I mean, I get back to it. It's only a small move, a small level of interest in investment silver, and whether it's available or not, it's another thing. We found that to be the case now. So, interesting comments.
Yeah, if you look at, we're a member of the Silver Institute, and if you look at the numbers for 2017, there was 800 million ounces produced and 1 billion ounces consumed, and they make up that 200 million ounce difference by saying half of it was recycled and half of it came from government or hoards of some kind. So, and no one knows. And there's a whole industry of people. They try to figure out how much silver's in this thing, and they try to figure out how much silver's in a Toyota car or a Tesla car or a Sony television, and they just guesstimate. And you ask Samsung or Tiffany or any of these huge consumers of silver how much silver they consume in a year, and they won't tell you, because they're absolutely paranoid that the market's going to figure out what kind of demand they have for the metal. And because if the market actually knew what amount that is consumed, if that ever got to Wall Street or major institutions around the world, the hedge funds would be loading up on metal just to get the producers to pay up. But of course they don't. Right?
Yep. Wow.
Okay, look, my last question for this interview, Darryl's got one or two more. If you haven't guessed already, I'm a big believer and follower of Ron Paul and sound money. And the question leads into that. But do you believe it may take blood on the streets for politicians to take notice of libertarian thinking people that gold and silver is sound money and that these metals must come back into the monetary system?
Is it going to take libertarians to do that?
I say libertarians who are a lot less government than what there is today.
Well, Ron Paul's son is struggling away, and of course, Ron Paul, tries to keep everything going, and then I'm a big follower of his as well. And then there are lots of good people out there that have those beliefs and continually push those beliefs. But the system works. The banking system works, and unfortunately, something's going to change to break it. I personally think it's going to be a supply shock more than anything. I think the mining sector is extremely cyclical, and we're seeing less copper, less zinc, less lead, less silver being produced over the last 4 years than was produced recently. First Majestic has 4 mines that are producing less silver today than they did before, and that's right across the entire spectrum of metals and right around the world and all precious metals and base metals. And that's a function of lack of investment. So above ground supplies dwindle, and which is normal. And then all of a sudden, there's a price shock. Right now, short emerging markets. So when the money starts flowing back in emerging markets, investment will pick up again. And then when investment picks up, the demand will pick up, and the metal's not going to be there, and it's going to cause prices to go up. And then what happens? Then the miners start investing capital again, and then with a 5-year delay, they're going to start meeting that demand, and then prices will top out and likely start the cycle all over again. It's a crazy system. as a miner, we have to just learn to be resilient and learn to work within those systems. I would hope one day governments wake up to the instability that they create in these emerging markets, because these emerging markets are critical for the supply of what we need as a human race, because they're the suppliers of all this stuff that we need. And if the big governments around the world continually allow the financial markets to work the way they do work, that creates this instability and these major distortions, and these supply shocks will just continually occur, and countries around the world will continually go bankrupt. Their currencies will continually drop, and then create massive unemployment around the world. And these big countries sit back and think, well, it's not affecting us, it's okay. But actually, it does affect them. And it's going to take, I think, just a rethinking of how the bigger governments really allow the banks to really manage all these emerging markets, because we just can't keep loading all this debt on all these emerging markets and then expect them to continue with the growth and supplying products that we need for the rest of the planet. And I think the financial system will change, but it's gonna take some very good people, and then people like Ron Paul and others. And they just have to keep speaking up. And but at the end of the day, the governments, unfortunately, they only react when there's a problem. The governments don't look 10 years, 20 years, 30 years down the road. They're just looking for the next election, and how to win the next election.
Just to finish off, that's a great answer, Keith, and I really enjoy listening to you. Just very quickly, how long does it take from discovering silver in the ground to having it mined and out of the ground? How many years process is that?
Depends what country you're in.
Right. Okay.
You're in Australia. You're probably okay. Most Canada as well. Mexico would be shorter timelines. It all comes down to permitting, and permitting some jurisdictions are very difficult. Alaska, California, forget it. Places you don't want to be. Venezuela, China, Russia. These are places that aren't exactly friendly to foreign investors. So those types of places, if you had a discovery there, you may either lose it or they might never permit it for you.
Okay.
So you, as a miner, you just really, jurisdiction is key, and that's why I like Mexico so much, is because it's such a great jurisdiction to be active in.
Okay, thank you.
To answer your question, about 10 years.
Okay, right. You just mentioned Ron Paul. His name came in discussion a few moments ago. One would expect Ron Paul, and I'm a great supporter of Ron Paul. I'm sure I'm certainly not alone there. But he constantly make reference to a downturn in the economy and the reasons as to why. But when we get to other major players, typically Janet Yellen, former Fed Reserve head, she says it's time for alarm. Claudio Borio, Bank of International Settlements, world economy is about to get very sick. Christine Lagarde, IMF, all of these people are now warning, these big players warning of a massive downturn in the economy. Can you just give us some just quick thoughts on that? I mean, we should be taking that very seriously.
Well, I guess they should know, shouldn't they?
Yes, they should.
A lot of them were involved in creating the mess that we currently are.
Correct.
Are witnessing in front of our eyes, and
exactly.
I hope they have a solution. Jim. I'm a big follower of Jim Rickards, and
of course.
And you've got some major governments around the world buying gold. They must be doing it for a reason, I would assume.
Yes.
They wouldn't be buying it if it was an archaic relic, as others have called it in the past. Too bad Canada doesn't own any gold. I wish Canada would step up and start buying some gold. And I don't know about Australia, but I think Australia's got some gold left in their mint.
Not a lot. We sold a lot off, Keith. Very disappointing.
John Adams, just by the way, there, Keith. John Adams just did a TV program where he said the Australian government has got 80 tons. That's what we have, 80 tons in our reserve. But 11 tons of those, it's all in the UK, but there's 11 tons that are missing, and we're trying to work out where those 11 tons are. So yeah, interesting days ahead.
One of those Spanish galleons on the bottom of the Atlantic.
Yeah. It's interesting too, Keith, when you get people like Alan Greenspan and you watch these people with genuine interest. And when he was the head of the Fed, he spoke very poorly of gold and silver. But when they're out on the public speaking circuit and they leave that position, their attitude towards the shiny metal changes dramatically, doesn't it? Interesting.
Well, I tend to be optimistic. There's a lot of really good things happening in the mining sector right now. We're seeing, a lot of changes over the last couple of years caused by reducing margins. We went through about a 20 or 30 year period where the mining sector just was not attracting any talent. All the young, kids out of school were going into law, going into accounting, and going into other things. And mining was being completely ignored. And that I see that changing, and we're seeing some really good quality young men and girls coming out with electrical engineering degrees, chemical engineering degrees, and wanting to come into the mining sector. And they're showing up at these mines. These guys grew up with iPads and iPhones, and they're asking questions, and they're saying, like, "What the heck are you doing?" And they're creating change, and it's pretty interesting. I think the same thing's going to happen to the financial system. I think that we've got young people coming. The millennials. They're not going to put up with a lot of the crap that some of the guys that are running the system now have been used to doing over the last 20 or 30 years. And I think it's a young group of people that are coming into business today that we need to really nurture and really need to support, because it's those guys that are going to really change the system.
Yeah, I agree. I got a final question for you.
Sure.
This is from our chief economist, John Adams, at Scottish Gold Australia. He asked the question, and I quote, "First Majestic Silver has all of its silver mine assets in Mexico, are currently possibly posing quite different political risks and has a different legal system to that of the United States and Canada. For those viewers who may consider investing in your company, can you describe what is the risk of the Mexican government typically nationalizing silver mines if the Mexican peso free falls and international silver spot price spikes? Given that Canadian gold mining companies operating in Venezuela did not receive adequate compensation from the Venezuelan government when the gold mines were nationalized back in 2011, how does First Majestic Silver protect investor wealth from the risk of silver mine nationalization in Mexico?"
Well, it's a long question. I think there's more than one question in that. For one thing, Mexico is not a communist country. It's a very democratic country. It's been in business for as long as I've been alive, with Mexico and Canada, or part of the United States and Canada, and U.S. and Canada are the first and second trading partners. And I don't think Mexico is going to be wanting to change that anytime soon, or anytime in the future, at least in our future. So I'm not worried about it at all. I traveled to Mexico for the first time in 1984, and I was enamored by the people, and I always wanted to do business there, and it was a pleasure for me to start working there in the early 2000s. And we built a great team of people. We employed 6,000 people in Mexico, and if you include all the communities and towns that surround our operations, we influence over 50,000 people in Mexico.
Right.
There's over 300 Canadian miners active in the country. There's a ton of investment that goes into Mexico from the Canadian mining sector. forget about the U.S. oil sector, which also invests a ton of money into Mexico. I just don't see it as a risk at all. When I look at risk, I look at permitting risk more than anything, because we kind of covered this a little bit earlier. You can have a great discovery in Venezuela, let's say, use that, and you brought that country up, and then they may let you drill, but they would probably steal your asset if you ever found one. But you have to know that as a management team going into a country. When you don't just show up in a jurisdiction without having almost 100% likelihood that you're going to be able to permit an asset, and that's why I wouldn't buy an asset in California. I wouldn't buy an asset in Alaska, but yet Arizona and Nevada would be fine places to buy an asset. British Columbia in Canada is a challenging province, and I've never invested in a project in British Columbia for that same reason. But Ontario is a great place to be investing in. So the political risk, even within Canada, changes from province to province. And in Mexico, you've got security challenges, and the security risks do change from region to region. And you have to be concerned and keep your eyes wide open when you're in different regions within the country. But we've been there for 16 years. We're approaching our 17th year next year, and I personally think Mexico is the best jurisdiction on the planet to be active in as a Canadian mining company.
Wow,
interesting.
So you're on safe ground.
Yeah.
Safe footing. Okay, look, at this point, Keith, look, I really appreciate the time. It's been 45 minutes or thereabouts, and I know time is very precious to you. I'd like to express a very big thank you for your time and input today. It's very much appreciated. In addition, and most importantly, Keith, if any of our viewers would like to know more about any of your companies, including First Majestic Silver Corp, what would be the best course of action for them?
I'm on Twitter. I don't use it a lot, but there's some interesting things I put out on Twitter. It's just @Keith_Neumeyer. Feel free to look me up. And of course, I'm the CEO and president and founder of First Majestic Silver. The website is just firstmajestic.com. I'm also the chairman of a gold company, a company I founded called First Mining Gold, just firstmininggold.com. And feel free to go to either one of those websites. We have toll-free phone numbers. We got presentations posted there. If you're wanting further information, just please feel free to contact me.
Okay. I know a number of our viewers now and subscribers, in fact, have investments with your companies, and so love to think that could quadruple overnight. That'd be fantastic.
Well, we have 85,000 shareholders worldwide, and I know there's several in Australia.
Fantastic. Look, thanks. Thank you again. And look, we'd look forward to doing this again. I'd love to think we could do that in the not too distant future. And let's hope between now and then, silver's gone for a rip and it's left $10 or $20 an ounce. It'd be nice, wouldn't it? To our viewers and subscribers, this is Darryl and Brian from As Good as Gold Australia. Thank you for your valued support. Stay focused, and we'll see you again next time. Thank you so much.
Thank you, Keith.
Thank you.
Have a great day. Thank you.
Thank you.